work. But the day the paper was published and the moment the Genesis block came out, it was just a science experiment. And the end goal of that science experiment is the unit of account, probably in Satoshis, because in Bitcoin it will be challenging. So once you see maybe not even the majority, but like 20% of the world start to denominate things in Satoshis, maybe adjusting them once a year. And the interesting part is, contrary to the belief that human population is going to keep growing exponentially, it really won't. I really think that the human population is about to hit that tipping point and start to flatten or turn down globally, which is kind of important because if human population was to double or triple, you got a little bit of an issue with Bitcoin being the unit of account, because you have more and more people. But it's going to all coincide as Bitcoin does become that unit of account, probably around 2030, going into 2035, which is probably around the time the human population will start to decrease globally on a small scale, which will allow Bitcoin to maintain that unit of account. And I think that's also important, that no one really thinks about that far ahead. And that's when it actually becomes the standard. I think that's the final element that people will drive that.
So I know you guys want to chime in, but if I can reiterate, by thinking in terms of Bitcoin, you mean thinking in terms of Satoshis as part of the adopting the Bitcoin standard is, I guess if we're denominating our wealth, which a lot of us in this room are, in Satoshis or in Bitcoin, we kind of already have adopted the Bitcoin standard. Knut, we'll go to you and then...
Right, but not as a unit of account. I mean, I've tried, but I think I've lasted the longest in trying to maintain Bitcoin as a unit of account, but even I have to go back to the dollar. But next time around, you know, I want to be ahead of the curve again to go into the unit of account of Bitcoin and this time stay there.
Yeah, to that point, I'm not sure that Bitcoin will ever become a unit of account, but for different reasons. Because you know more about markets than me, way more. So tell me what's wrong with this argument. Network technologies tend to have an S-shaped adoption curve. So first, slowly at first, then all at once, and then when we reach adoption for the entire planet, the curve smooths out again, and we have an S-shaped adoption curve. I believe this will be true for Bitcoin adoption as well, but it does not reflect the Bitcoin price, because there's more money in the world than there are people. So when all the money in the world is in Bitcoin, and it's pointless to speak about any other currency at all because everyone denominates everything in Bitcoin, then we have a global sound money-free market, which is a much more effective mechanism for progress than what we have now, which is an interventionist market. So what happens then is like purchasing power goes up at an even faster rate. So when this adoption curve has smoothed out for the world population, the price adoption will just continue to skyrocket. And I don't really see an end point to this. Like, the prices of everything will just keep decreasing over time. And I'm struggling to find a way to wrap my head around what hyper-Bitcoinization implies, when that, if that smooths out, if it just keeps on getting better all the time, on a really long time scale.
I feel like Gabe wants to say something right now.
I got some notes here.
Then I'll tackle it. It's taking too many notes.
Take it away, Gabe.
Yeah, I have comments on all these on all the things you guys have
all
said. All right, so first of all, to your point about the Satoshi being the unit, in the code base there is, as Jimmy can tell you, there is no such thing as a Bitcoin. The Satoshi is actually the unit of the Bitcoin code base. Bitcoin is something that we made up, Satoshi made up as an expediency, so there's actually 2.1 quadrillion units, not 21 million. Secondly, I agree with you about the population situation. There will be some maximum, and then we'll drop off from there, or go flat or something. I think I agree with you. Also, I agree with you about your time scale for penetration of a huge majority of humanity using Bitcoin on your time scale there. If only because Bitcoin is growing exponentially, as you pointed out, and on an exponential time scale, when people say we're at about 1% of human penetration right now, ownership of Bitcoin, 70, 75 million perhaps users. I don't know if that's accurate, but there's been a number of estimates. It's stunning to us old-timers that we've even reached this point. But that's 1% of the world population on an exponential scale. 1% is about halfway along the time scale. Bitcoin's 12 years old. 12 years from now is 2033, so I'm very much in agreement with your assessment or prediction of that. But as far as the units of account not being possible, I don't really agree with that. I mean, because we can keep breaking the Satoshis down into smaller and smaller units, at least on the Lightning Network. So I do think that it is possible to do it, but I very much agree with your assessment about appreciation.
Can I explain that a bit further?
Sure, yeah.
It's not about not being able to do sub-satoshis. It's like, it's not very useful with a unit of account that keeps on going up in purchasing power over time. So I think we might denominate stuff in gallons of milk or something more tangible and stable than, because a stable price is sort of like an oxymoron, because prices are stable for one reason, and it's an artificial reason. Prices ought not to be stable, they ought to go down all the time, because we get better at doing stuff all the time. So prices ought to be going down.
Yeah.
But that poses us with another problem, and it's that the problem of how do you measure something with a measuring stick that keeps on
getting longer?
Getting longer.
Right. So my view on this is that, as you mentioned earlier, the S-curve and hyper adoption. That's gonna, the majority of Bitcoin gains will probably take place during those few years of hyper adoption, and this is why, this is why I've been a little bit critical of the stock-to-flow model, just like Ugly mentioned earlier, is that we can measure the stock-to-flow, but you're basically guessing from history where the price is going to be, and that part doesn't necessarily make sense to me.
That's way too bearish, that model.
And also what was said earlier, people don't realize, when this hyper Bitcoinization comes for realization of what Bitcoin is, it's gonna destroy all other savings of wealth. The real estate market, the art market, the rare wines, anything, the stock market is probably overvalued as well because of this. No company will ever buy their own stock back, they're just gonna buy more Bitcoin. And pretty much a lot of stuff, not to mention people will stop buying shit they don't need because they now have the best deflationary currency there is. And this huge increase in the price of Bitcoin, and that would probably be that last bubble. And after that, I think there could be a period where you can denominate things in Satoshis and it will be a dynamic, right? After that, once Bitcoin is stable, then the art market and the real estate market will then slowly start to rise again, right? Because Bitcoin has sucked so much value out of them that it's no longer interesting to hold Bitcoin for speculation and get richer. At that point, you start to use that unit of account of Satoshis to buy the things you actually want. Also, this whole thing implies the US dollar implodes, so the US is no more. Could be a breakup of the US into different states. I mean, we're certainly headed there right now with the big divide, Republican states versus the Democrat states. I think that's coming. The eventual collapse of the US dollar, that's coming. So a lot of other pieces of the puzzle have to happen. Like, if the dollar is no longer that stable unit, well, no one's going to trust the IMF, no one's going to, with their basket, no one's going to trust China. But again, all of that has to happen around the same time, probably another decade in the first half of 2030s.
Knut, we'll go to you, but Knut, do you see what shirt you're wearing, by the way? So
Infinity divided by 21.
Infinity divided by 21. That's how it's going to work.
August 21st is the first official Bitcoin Infinity Day.
There you go.
On this day, let's make this a thing. On Bitcoin Infinity Day, August 21st, you either you hodl, that's level 1. Level 2 is you buy 20 more times than your average daily purchase.
Okay.
Level 3 is you buy 21 million satoshis, if that's lower than level 2. No, if that's higher than level 2. And level 4 is you get the damn tattoo.
All right. That's that'll be my first tattoo.
We're going to go to you in a second, Gabriel, but it's important, Knut, that we don't conflate, I make this mistake all the time as well, we don't conflate money with wealth. That's, I think, a lot of these Keynesian trap that we fall into is we think money is wealth. Money is not wealth, so it's important to make that distinction. How much money there is in the world, that could be infinite. The amount of wealth there is in the world, that is an amount that is slowly growing over time. So this is why our unit of account will probably be worth more and more as time goes on.
But don't you agree that it will grow faster? That total amount of wealth would grow faster if we were on a sound money standard.
Yes.
100%.
And that's why I think this can be much weirder than we think.
Yes.
And there's no end point to hyper-Bitcoinization. Can anyone tell me what hyper-Bitcoinization looks like? When does it end?
What
When does it end?
I want to say the unit of account.
Well,
That's the end. That's the end point. That's the end goal. Bitcoin standard and the big hyper-Bitcoinization. When 20% of the world is denominating in satoshis and don't change. I mean, maybe once a year they adjust.
Well,
and
I think
probably down.
both of you are right. I think both of you are right.
Yeah.
So I don't think a unit of account is even possible in the scenario that Knut and I predict, which is Bitcoin and digital sound money will make economic activity so much more radically efficient around the world. It has so many direct and indirect second order and higher order effects on economic calculation and economic activity that I completely agree with you that we will not see a 19th century 2 to 6% a year appreciation of the sound money. No, it will be at least 10 or 12 when we stop this current adoption. The hyper adoption phase is currently appreciating around 200% a year median. But after that, I think we're only going to cushion down on 10 or 12, and then it goes up even more. So I think perhaps the function of a unit of account of money will be destroyed forever, and we will never have anything like a stable reference point for money. And people might try to use gallons of milk, but nothing will ever be stable. And I think that's actually the most philosophically sound choice, is for there not to be a unit of account function at all, and prices do what they should, which is vary according to the needs of the economy.
Yeah, stable coin is an oxymoron.
Yeah, there will never be a stable coin. Bitcoin, I think it'll have a short phase of being a unit of account before it becomes too appreciative to use as a unit of account after just a few years.
But I can agree to what Tom said, that like it'll probably level off first as it becomes a unit of account, but then like speed up again as the market gets more and more efficient across the globe.
Maybe not 200%, but 10, 20, even 30% in 50 years or something could
increasing.
Easily possible. Yeah, increasing. So it's a double S curve. It's a scharfes S, as they say in German. It's got two S's. The second one continues up further again through the rest of the century.
So Tom was mentioning earlier that Bitcoin started out as a science experiment, not really a monetary asset. It started out as a science experiment that a few cryptography nerds were running on their computers, maybe even less than a dozen for a number of months. So how did you get from some weird science project that just a few nerds were running to a global monetary asset worth, $1 trillion, give or take. How do you think we got there? And the second part of the question is, how do we get to the hyper-Bitcoinization from this moment that we are? So how do we get here, and how do we take the next step? How do we get to the next 12 years? Because I heard Ugly say earlier that it's not going to be about institutional money, and it's not going to be about banking the unbanked. It's going to be about convincing Joe down at the barber shop, to adopt Bitcoin and things like that, and friends and family. So how do we get here, Gabriel? Let me ask you that question. I'm going to ask everybody the same question. How do we get here, Gabriel? And how do we take the next step to go to this hyper-Bitcoinization standard?
Well, make no mistake, this is hyper-Bitcoinization. 200% a year, that's it. And I mean, we may be at the knee of that vertical curve now only, but this is it. I mean, especially 2021, with the transactional layer in late beta and working very functionally, the Lightning Network, you saw the first nation state declare Bitcoin legal tender this year. That's happening in 10 days. Yeah, in 10 days in El Salvador, Bitcoin will be a worldwide national currency. That has a lot of legal implications for the entire world, because now large institutions must recognize Bitcoin as a national currency. That doesn't just change life in El Salvador. And the implications of that on a political level are important. We'll talk about that on the political panel tomorrow. But I think what we're going to see is exactly as Ugly stated, individuals getting educated, but also individuals making the obvious choice for their life. I run a media company. It's an international media company. We've got business entities in 3 different countries and contractors working in more than 3 countries. As many businesses now function. And I use Bitcoin because it's the cheapest and best alternative sometimes. For example, paying payroll. Even though we make only, say, 0.1% of our revenue getting paid in Bitcoin, nevertheless, exchanging some fiat into Bitcoin to pay payroll about 40% of the time is the best choice, just because it works better. That's why people will adopt it. It works better. I'm using it transactionally in my business, which is great, but as people begin to understand Bitcoin, they will invest in it as a store of value, and that's been happening and will happen even more. So it's a matter of necessity. If you're in Venezuela, if you're in countries with economies dropping like a rock, that is a lifeboat. You're doing it out of necessity. Bitcoin will win because it works better.
Same question of how do we get here from a science project, and how do we take the next big leap forward to hyper-Bitcoinization of everyone using Satoshi as the standard?
Yeah, I believe we've already passed the point of no return. So hyper-Bitcoinization is happening, and it will continue to happen over the next centuries, or decades, or centuries, or whatever. As I said, there's no end point. But we can speed up the process somewhat by educating each other, and that's what we can do. But regardless of if we do that or not, it's still going to happen. So there's no stopping this, because Joe the barber down the street will see the benefits of Bitcoin sooner or later, when he realizes that this thing is not going away, and it's going up in purchasing power over time. Everyone will eventually notice that pattern.
Gotcha. Same question, John. How do we get here from a science project, and how do we make that next leap? How's that going to happen?
I think it was just Satoshi's view that while it was a science project and all the cypherpunks were the first ones on it, he was the one that constantly kept going back. This is money. This is a currency. This is the future of money. So he kept the focus on the money part until he actually left. Even though money was something people were creating, think a lot of people missed the boat, including like Vitalik Buterin totally missed the point that the real innovation is decentralized money, not contracts. I mean, it's nice. One day there'll probably be a bunch of contracts on top of Bitcoin, on Liquid and other side chains, but that's not even close to the innovation there. And how do we get forward? Education, and it's rough because Bitcoin 2021 had 12,000 people. How many of you were there? How many of you learned something new?
Good point.
It's education. More focus on education. I'm trying to do my part. And that's the only way to get there, and it's going to happen. The better technology almost always wins. Like 99% of the time, the better technology will win out. Especially as the world is going through the big battle between tyranny and freedom right now. As long as freedom wins, Bitcoin will win. And Bitcoin, and they're fighting with each other. Bitcoin might be the only thing in the way of full tyranny over the next decade. So they're fighting off each other. Bitcoin will help bring about freedom, and people that want freedom will greatly benefit by Bitcoin. And there's nothing that can stop it.
Yeah, you say that the better technology wins 99.9% of the time. Were you thinking of the US not adopting the metric system?
No, the metric system sucks. Don't get me started on that. I hate the metric.
Yeah, no, we have a lot of inefficiency. The most frustrating one that everyone deals with right now is still phone plugs and plugs in general. But I think the world will eventually move to USB-Cs. I mean, it's just silly things like driving on different sides of the road. Autonomous cars will probably fix that problem. Probably, I don't know, we'll see. But they have a chance of fixing that problem. But a lot, like there's like 18 different wall outlets for plugs for your electricity grid. We don't even have one electricity grid, we have the two different versions of voltages. It's rough, and the moment Bitcoin started doing something good, here come 8,000 shitcoins. I don't know, people just don't want to stay on a good thing, or like everyone just thinks they can do better by themselves, and it's not, they learn and they fail.
So Gabriel, you said you were using Bitcoin as a transactional currency. I know Tone has been using it as a transaction. He's been accepting payments in Bitcoin for a lot of his services. And a lot of us do occasionally, like when we go to Bitcoin Miami, or we're at PortFest or someplace like that, we do like to to spend small amounts of Bitcoin, whether they're on-chain or Lightning. So this adoption curve that we're all talking about, this S curve, where we're all going to a Bitcoin standard, do you think that there's...
J curve.
The J curve? Good one, J curve. Do you think that there's any validity to trying to argue over whether what order it needs to be adopted in order for it to become monetized? Does it need to be collectible first, then it needs to be store value, then a transaction currency, or does that have to be a transactional medium of exchange first before it comes to store value? Because I feel like there's a lot of people out there, especially people who support things like Bitcoin Cash, who are out there arguing that we need to be using it as a transactional currency, then it becomes a store value. I hear a lot of Bitcoin standard bearers, or Bitcoin maximalists, as they like to call us, argue the opposite, that it needs to be a store value first, and you're dumb if you spend your Bitcoin. And honestly, I don't think either argument holds true. I don't think it's an either or. And I do think that you can kind of adopt both at the same time. And in fact, you could argue that perhaps in 2012 and 2013, it was being used more as a transactional currency than it is being used, more as a store of value. That argument came later. So maybe the Bcashers are right. Maybe they do have an argument that it needs to be a medium of exchange before it becomes a store of value. Not to say Bcashers, but don't buy Bcash, don't. So what do you think about that? Do you think that there's a certain order, or do you think it's all of the above? And how do you think we get to that hyper standard Bitcoinization, although, as you said, we're already there?
That's a challenging question to answer. There's a few different sort of angles to look at it from and questions to untangle there. So first of all, this division of functions of money is an abstract concept. It has an uneven application to reality and human beings taking actions in life. So in some sense, it's a synthetic construct, and we shouldn't take it too seriously. We shouldn't mistake the map for the territory. But considering that, if we look at those functions of money, store of value, medium of exchange, unit of account, in a sense, each can be considered a network effect of its own. And they're very dynamic. They influence each other. That's why this is such a challenging question. So, for example, yes, I'm using Bitcoin as a medium of exchange. However, on a wider scale, the use of Bitcoin as a medium of exchange is curtailed by the price volatility. Because it's only $1 trillion market cap, the rest of the world's economy can slosh it around like a tiny toy boat on the ocean, and and also it's much harder to manipulate the market because one side of it, the Bitcoin, is a pure asset that can't be printed out of thin air. So we're actually getting some decent price finding in the Bitcoin market because of that, because you can satisfy a contract within under 10 minutes. So we've got this very high price value volatility. Easy 5% moves in a day, no problem, if not even 10 or 15 occasionally. That makes it much more challenging to use as a medium of exchange on a wide scale, and so I teach my staff who do not have the luxury of saving more than 5 or 10% of their Bitcoin that they get paid from my job, exchange it right away. As soon as you get this, and I warn them, I'm just about to send out the Bitcoin, I'm the guy doing it, of course. I'm gonna send it out, make sure you cash out whatever you are gonna need for your life. And you can save, I highly recommend saving in Bitcoin, but don't save more than you can afford. And definitely don't wait longer than you can, wait as little as you can and cash it out so that you get affected by this volatility as little as possible. And it's a dangerous thing. If your costs are 98% of your pay, like a lot of people live in the world, if you lose 3 or 7% of your paycheck in an hour or two, that can be a real problem for you. So I'm very conscious of the risks that I'm putting my staff in and apologetic, but at times international finance is incredibly inefficient, slow, and expensive. So I don't want them to have to wait an extra 6 days, 8 days, 10, 12 days sometimes to get paid. If they're we have a graphic designer in Venezuela, for example. So it's challenging. So that's on the medium exchange side, and then on the store value side, it depends on your time horizon. Once again, the volatility can bite you in the butt. So at least have a 5-year time horizon or whatever it is.
Yeah, I like what you said about there being a network effect between the different functions, store value, medium exchange, medium account. I don't think I didn't quite put it that way, but that makes sense. And that's kind of how I saw it too. I feel like these different functions kind of aid each other, and they're not really competing against each other. Go ahead.
They can't be considered on their own ever. They're very interrelated, intertwined with each other.
Yeah, but I think functionality as a medium of exchange, the whole narrative around that has been distorted by Keynesian thinking and by this theory of the velocity of money. Because according to Keynesians, we gain something, everything the money is transacted, and that is true in a sense, but if you artificially inflate the currency, every transaction is slightly more depraved. You buy consumer goods instead of making sound investments. So we tend to see a monetary system that is not commonly used as a medium of exchange as something bad, because people choose not to spend their money. But this is not something bad, it's something good. Bitcoin is still excellent as a medium of exchange. You scan a QR code, you send your Bitcoin, and Lightning Network even better. But the functionality is there, and it's just that people choose not to spend their money except for occasions where it's absolutely worth it. Like you need to make a sound investment in order to rid yourself of your Bitcoin. So we're approaching this from the wrong angle, and we're thinking this will be used for coffee and Christmas presents and paper straws and bullshit. But it will not. People will use it more cleverly. So it is already a perfect medium of exchange. It's just that people have a distorted view of what that implies. Because the velocity of money is a bullshit metric.
So what is it? Or we just kind of buy less trash? What would Tom was saying? We're going to be more selective with our purchases. We're not going to be buying useless things anymore.
Well, yeah, that's one thing. But in the early days, Bitcoin always had this dynamic of store of value versus medium of exchange. And obviously it has to have some value before anyone can accept it. And Bitcoin went through this progression of you have to be willing to spend it on something, and it's a dual dynamic. The person accepting it, usually it's the preferred currency for that person. And the person paying with it either is forced to do it because the person accepting it's the only form of payment, like what happened with Silk Road, what happened with WikiLeaks. Some of those early use cases, it was the only option. And today, it's a little bit different. Today, unlike that time in the past, because as adoption is growing, today Bitcoiners are more selective in a way that obviously anything that's not illicit will take other forms of payment as well, but there are anomalies like the Bitcoin watch guy, like the watch that I'm wearing, he only accepts Bitcoin. He doesn't accept any other form of payment. He makes a limited edition watch and he knows he's going to sell out and he doesn't care. He'll wait for that payment. So again, you still have these niche places for only Bitcoin, but Bitcoiners also like to support the community. So if you have two items, or two items being sold, and you know one of the people is going to hold on to as much of that Bitcoin as possible, and the other one is going to liquidate it right away, obviously you're going to go with to support the community, the guy that's going to hold on to it, because that also benefits you, because it raises the value of Bitcoin that you have. The same thing could be said for that one item. Like if a person is selling that item for Bitcoin or fiat without even competition, the people that are spending the Bitcoin do a little bit of a mental analysis. Well, if I know he's going to sell the Bitcoin, why would I pay him in Bitcoin? But if I know he's going to keep the Bitcoin, again, that benefits me as well. So maybe it does make sense for me to spend the Bitcoin, and this way I'm going to support someone that's going to hold on to it. So it's always this dynamic between medium of exchange and store of value. I just rate store of value to be more important, more useful, and drives the equation. It's like the same debate over, does hash rate drive the price or does price drive hash rate? It's obvious that the price drives the hash rate, right? But like you can make an argument, and we know we have mutual friends of ours that take on these ridiculous arguments just because they're able to argue the point. But like from a common sense perspective, it makes no sense. Like it makes absolutely no sense that the hash rate would drive the price. But people still debate it for some God knows what reason. It's the same thing with store of value versus medium of exchange. Yes, they both drive each other, but it's insanity to think that the medium of exchange is going to drive the store of value property.
Yeah, like payment systems are everywhere, and they're cheap, and they're not worth very much. They're given out. Jeff Booth is onto this about all the time. Like Apple Pay and systems like that are given out for free to people. So medium of exchange is not that valuable.
Gotcha. It's not. It's not what got me excited about Bitcoin. Just to put it that way. That's how I got into Bitcoin, because I was interested in selling money, and I didn't think there was a solution. But someone from the audience, Muzzman or somebody, help me out. How are we doing on time?
Plenty of time.
Plenty of time. Okay, good.
Yeah, we should probably go to audience questions.
Yeah, I was thinking about that too. Should we?
I had a quick comment I wanted to make before we go to the questions. I agree with Tone about Bitcoin being perhaps this magic ingredient that allows freedom to vanquish authoritarians, at least for some period of time, if not forever. And on the subject of forever, you mentioned that the J curve where it just goes forever and we have this wonderful Bitcoin future. I do think there are some fundamental scientific and engineering breakthroughs which could render Bitcoin obsolete. Quantum computing is not among them because it's relatively easy to, not easy, but it's a mathematics research issue to search for algorithms that we can use. And in fact, we could actually swap out, I believe it's SHA-256, which is not quantum proof. We could swap it out tomorrow if the community decided we wanted to do it. We could throw in Shor's algorithm or some other quantum proof
A little
algorithm.
more complicated than that, but yeah.
Yeah, no, it's not easy, but it is conceivable that we could throw in another algorithm and continue with Bitcoin. However, things like time-space engineering, very cutting-edge unity physics, as Giacomo can perhaps address, even quantum networking could be a Bitcoin killer in the sense that by not having the limitation of the speed of light, if we had instantaneous communications around the world, literally instantaneous, like not a microsecond, but like the exact same moment.
Hey Gabriel, don't forget about there is now of all the incentives combined in history for the invention of time travel and going back in time, you basically just doubled all that. But of any incentive anyone had thought of, why to invent a time machine and go back in time, Bitcoin just dwarfs all of them combined.
Yeah, it's so good to go back and buy Bitcoin. But the thing is that it's the multiverse theory, right? So you go going on a different timeline, but still, you'll still rock it. But so there are some weird, really intense, base layer scientific breakthroughs that would mean that we would probably have a different type of ledger, or maybe not one at all. Like if time travel were common, you're talking, but that would change life so greatly that you wouldn't care about Bitcoin.
If your biggest worry for Bitcoin is that someone will invent time travel, I'm okay with that.
Yeah, that's it's pretty solid.
The question just line up, guys. Mike's right there.
Alright, you got it way over my head. I'm not trying to keep it simple. Bitcoin is static. The Bitcoin standard is dynamic. And that's why you guys all talk differently and make different sense of this thing. I think that's what it is to me. That Bitcoin is this thing that it's got, which I was in common entire thing. It's got this fixed supply. It's got this security. It's unconfiscatable. It's the longest chain with proof of work. And that is static. But how we apply this is dynamic. We don't know what the Bitcoin standard is. All of you guys have a different opinion of what it is, and that's what we're here for. That's what's really cool, and that's what you guys, the next generation, we're going to find out. Because they learned 120 years ago what a gold standard was. Hopefully you guys don't nationalize whatever you wind up doing.
Very, very good point there, I believe, because Bitcoin itself is unchanging, but we do have things like Strike and Lightning Network and Liquid and Taproot and things like that that are just evolving. And I think that's kind of what we mean by the Bitcoin standard. I think Gabriel was mentioning something about that earlier. So yeah, anybody have any thoughts on the fact that Bitcoin is static and the Bitcoin standard is dynamic? Anyone have any thoughts on that?
Yeah, there will always be people writing laws, and the Bitcoin standard will have to navigate those, so it will always be dynamic. But we'll see. A lot depends on people's freedom of movement in the future. I think that's the biggest factor. The more people can freely move around the world, the less people are tied into a certain jurisdiction, the better it is for that Bitcoin standard, because as a borderless person, Bitcoin is your currency. You have no other. And you no longer need a bank. So we'll see. Social dynamics will drive the Bitcoin standard quite a bit.
Go ahead.
Yeah, this ties into Austrian economics and supply and demand. I view it as supply is something from the physical realm and something that ties into mathematics, and demand is something from the subjective realm and from people's minds, so which ties into praxeology. So you have supply and demand. In Bitcoin you have a fixed supply and a dynamic demand, which has no theoretical upper limit. So a potentially forever increasing demand and a fixed supply.
Well, I think
you do the math.
I think what makes Bitcoin unique is it's the only fungible asset that actually has a fixed supply. Everything else you can always, if there's enough, if the value of gold goes up enough, there's going to find new ways to come up with it, to mine it. So that's, I think, the uniqueness of Bitcoin. It's got that static supply, and it may be the only, like I said, fungible asset that has a static supply. There's certain things like an artwork from Leonardo da Vinci that has a static supply.
There's 13 of those around.
Yeah.
And they're immensely valuable. And one day there will only be 13 Bitcoin left.
Maybe, yeah.
Not maybe, certainly, because they get lost over time. So at one point there's only one single Bitcoin left. Think of the value when that happens. If you can see that potential value of that last single Bitcoin today, you get a rough estimate of what they should be worth to you today. So this is what's so amazing about this thing. I can't help myself. I keep falling down these rabbit holes, and
Think how much Velveeta you could buy with that one Bitcoin.
Anyway, the static supply, this is important to remember. It's only there because we agree that it's there.
100%.
It's only an agreement. We agree
social,
that this
socially
21
enforced.
million limit is there, or 2.1. Anyway, we're all in agreement that it's there, and that's the only reason that it is there. And as long as we can agree on that, we can have this perfect sound money society.
Right. Gabriel, any thoughts on the difference between the dynamic Bitcoin standard and the static Bitcoin? Kind of touched on some of those themes earlier.
Yes, I have a slightly different take on it. I consider Bitcoin and the Bitcoin standard to be both static and dynamic, both. So the code base of Bitcoin is dynamic. As we see, Taproot is being engaged. There's all sorts of innovation happening in order to make the system more efficient and powerful. So that side is static. Is dynamic. But then the principles of the system, that there's a block every 10 minutes, that the difficulty adjustments,
The halvening,
the supply, those are enforced socially static constructs. By the same principle, I see the same yin and yang in the Bitcoin standard. The ethical principles of making a system that is a win-win for all the users, and that it's not zero-sum, and decentralization. All sorts of philosophical principles are somewhat static or eternal in nature, but then how we implement them and many other things about the Bitcoin standard, and how it's defined, as we're going along, is very dynamic. So it's like a yin and yang, where the yang is a static energy and the yin is a dynamic energy, and they work together to create the whole.
Far out. Left man.
Far out. You said something earlier, it was kind of glossed over, and I'm surprised, Tone's eyeballs didn't explode when you said it. And that was basically, a decentralized Uber. Use Uber as an example. I've always thought about decentralized companies. And I just don't know, I think you might be alone on this, I don't know, I'm curious to hear what everyone thinks, but to build a decentralized Uber, you need a ton of money, and you traditionally raise capital, and then you have owners and shareholders and liabilities and regulations, and from down to the guy who has to pay the server bill, so I want to know, how can you actually think that there will be decentralized companies, and I'm not talking about a Disk or, which somebody's still got to pay that server bill, but in an Uber or something of that nature, to build something that requires that much capital, and you have so much, do you really think that could happen?
Yes.
Well,
Okay,
elaborate, because I'm going to take the other side.
Wait, hold on, let me elaborate on what you just said. It would be impossible to create a decentralized money standard. You would need a bunch of investors to come in and pay all the developers and pay for the servers, and somebody's going to have to foot the bill to create that decentralized money standard. Wrong. That's not how Floss works. That's not how open source software works. Instead, we see volunteers. We see people who believe in the project, who work in their free time out of passion, hobbyists. And after a while, then the industry comes in. So these projects start, that's how Floss works. It's a really important principle to understand in order to understand Bitcoin. You have to understand how free Libra open source software systems are created from the ground up and are continued on by all of the passionate participants. So what you said about BISC is also incorrect. There is no central server, there is no person paying. However, there are passionate people who donate their time and a little bit of resources, like, you know, maybe footing, but see, those type of costs are at the point where they're so low. For example, the domain name for BISC, or the hosting costs there. But now, that's actually being paid by the users. So it's just a matter of time, people donating their time. And this is how decentralized systems work. People donate their time because they believe in it, they think it's good for humanity, they want to see it succeed, and they contribute. However, your point that there would need to be some sort of data infrastructure for example, a decentralized Uber is a point well taken, but that's, once again, decentralized. You probably need that layer before it can be built. But I mean, look at BitTorrent. That's a decentralized data sharing protocol. We're definitely going to have decentralized service and client protocols. And now, after seeing the very recent innovations on Lightning, just from this year, not even in 2020 did I see this, third layer protocols. In other words, protocols, for example, using just the messaging protocol of Lightning Network. Not even, I mean, the fact that you can move money on it is almost secondary, because the Lightning Network, they did so much innovation in messaging and decentralized messaging and perfected the existing decentralized messaging protocols to such an extent that now you can actually build applications that utilize the Lightning Network as a messaging protocol. It's incredibly powerful, but you can also throw value in there too. So I do think that we're going to need to leverage the data infrastructure, decentralized data infrastructure, in order to create something that replaces these large, heavily used centralized apps such as ride sharing. So there's definitely some layers to get through before we get there, and certainly they'll never have a token. It'll be based on probably Lightning.
Yeah, so I got to think about it while you were speaking, and I can actually make the argument for a decentralized Uber, but not anytime soon. At the moment, yeah, I mean, these things need to be centralized for two reasons. One, to fight regulation. Two, for people to, a place to complain to. And three, there's a human element involved, which is the driver. Now, if you eliminate the human element, if you eliminate the driver, and now you have autonomous vehicles, and a couple of smart people, the next Satoshi, write some code that allows the car not only to have autonomous driving, but also to autonomously decide how it wants to spend its own money, and its own money is Satoshi's. So you release the code, and then you have a bunch of, someone maintains the code of the decentralized Uber, but then the car decides, who it wants to pick up based on people's rating. The car takes in the Satoshi payment, and the electronics in the car tell the car it needs to go in for a mechanic for a checkup, and as long as the car is doing a good job collecting money, driving people around, it has the money to pay the mechanic. So the only way you're getting a decentralized Uber is if, literally robots are taking over, and it's a person can buy this car and add it into the decentralized network, where the car just, doing its own thing. And the person is not responsible for his car. as long as that car as long as the code in the car able to maintain the technology of the car and it doesn't crash. And I mean, we're pretty good at technologies that don't crash. It's the human element that's the problem. Like how often do airplanes crash? Not to human error. I mean, we'll get there. So that's the future of decentralized cars.
Knut, do you have any thoughts on that question?
Yeah, back to basics again. I mean, a market is decentralized. So a company is just an entity in a decentralized network already. So I see no need whatsoever to have any decentralization. It's like the only reason we need decentralization in Bitcoin is the double spending problem again, and like to ensure that the coins can be double spent and the supply cannot be increased. It's an agreement, as I was on to earlier.
Well, so quickly, yeah, sorry, finish your thought.
So the market is already decentralized, and if people choose to exchange goods and services with each other, they do that by their own free will, and there's like no need for a decentralized anything, except for like the mechanics behind Bitcoin. The word, it's become a buzzword after Bitcoin was instituted.
No, there's clearly a need, right? Mostly because of censorship. There's clearly a need to decentralize YouTube and Twitter, but it's very challenging.
Yeah.
Because there is certainly a need to decentralize them, but it's a crazy effort and no one can get it done. But there's definitely a need for it.
Well, would you go so far as to call it a need? Because
based on the amount of censorship we have right now, absolutely. There's a need. I just think that it's not going to happen anytime soon.
But YouTube is just a platform that happened on the free market, and it is the way it is. We are the consumers of it, and we can choose not to use it. And
we can choose not to use it, and the rest of the world will choose not to hear us. Like, that's basically the end result.
I'm 100%.
But sorry, they won't have a choice not to hear us, right? We can choose not to use it, and no one will hear us, not by choice.
Alex has a question. We're going to get to
Yeah.
your question in a second, Alex. Real quick, I just want to add one thing to what all three of you are saying. To me, the question of decentralization is you lose some efficiency if you're decentralized, but you gain some other things. So the question is it worth it to give up some efficiency in order to gain something from being decentralized? So in the case of money, yes, I'm willing to give up some efficiency and be decentralized because having decentralized money is more important because we can't have anybody in charge of the money, in charge of the printer. In the case of Uber, in most cases, I don't want to give up the efficiency of going decentralized. There are some rare cases where it might make sense. For example, there was a short time period where Uber was banned in the city of Austin, and some sort of a decentralized version of Uber did emerge in the market. So in that case, yes, it was worth it to have a decentralized Uber, which was on Facebook, where they kind of the drivers and passengers kind of messaged each other on Facebook and figured out their own rate. But it was inefficient. It was better just to have Uber. So which is why the second that the government said, okay, Uber can come back, that decentralized solution went away. And then I'm not going to get into the social media thing. Maybe Alex wants to chime in on the social media.
Go ahead, Alex.
Yeah, I was just going to echo Knut's point. So, decentralization is not an end; it's a means to an end. And to Tone's thing, it's a means to prevent something like censorship. So what you're fighting with decentralization is censorship. But there's nothing wrong with censorship. Like, if I don't like you, fuck you, I can censor you. Like, if I don't want you in my house, I can kick you out. So private property and private individuals and private organizations should be able to censor whoever the fuck they want. That is not the problem. The issue we have in the world today, and so like, when you look at what Bitcoin is fighting against, it's fighting against the censorship of human action. So money sits in a completely different realm to any product, service, or thing that a company might be providing. So as we move on to a Bitcoin standard, what changes is competition starts to arise. So the marketplace, to Knut's thing, is that the marketplace is a sphere of a competition by private individuals and private entities who are fundamentally centralized in their own capacity, but operate on a network that is fundamentally decentralized, and they compete to provide services. Now, on a free market standard, if you start to censor all your fucking customers, they're going to go somewhere else. The reason that doesn't work today is because YouTube, Google, etc. are beneficiaries of a fucking system in which they disproportionately have money and can compete unfairly with any upstart. You fucking break that, then you actually have competition, and you don't have the need for censorship resistant, or you don't have the need for bullshit decentralized applications. There's fucking no need for that.
100%. I agree with that.
Alex, that was exactly on point. It was exactly the things I was supposed to say next, so now I have to think of something else to say, because that was what I was about to say. Just YouTube is a good example.
Buzzman, you got a question for us?
Yeah, first off, 5 minutos on the time schedule. Second off, okay, so in a decentralized company, its goal is ultimately profits. How do you
No, decentralized organization.
Okay. In a decentralized organization,
Its goal is not profits.
the goal is not profit.
No, it's if a decentralized company has no motive for profit, this is the only thing that makes it decentralized, right? Like
So-
each individual, there are a couple of developers of the Bitcoin network that have a salary, but like the Bitcoin doesn't have profits. Like the profits come from you holding the Bitcoin, helping make the Bitcoin better, right? So for example, in my decentralized Uber example of autonomous cars, you know, some developers are really, really happy that by cutting out this ridiculous middleman, by 20 people being good programmers, that it makes all Ubers like 50, 60% cheaper.
Right.
But what you said is, as far as I could be an operator, right? Maybe I buy a car and I, use it on this platform and it's earning me some money. There's a profit there. There's an incentive for me then to put the cars on the road
Yes.
and participate in this decentralized organization.
Yes.
And the decentralized organization would have to have a treasury. They would have to have some sort of reserve fund.
But go back to my Uber example. Each car collects the Satoshis directly from the customers. There is no
Peer-to-peer.
central treasury.
Peer-to-peer.
Yeah, so that as an operator in this theoretical example, it wouldn't cost me anything to put the cars on the road. I wouldn't have a subscription service. There would
Nope.
be no.
It would cost you to buy your stuff and put it on the road, but the app itself is not generating profit for a centralized entity. That's what decentralized thing. Just like there's no central treasury of Bitcoin. It's
Right, but then
all the owners.
But then you're going to run into a problem where there's too many cars on the road, and now the developers have to choose, like, how do we autonomously have some kind of a rating system to keep, like some cars come in, some cars go out if there are too many cars, if there's not enough cars. It will be a challenge, but the point is there is no central company. It's run like Bitcoin because there's no driver, and the car is driving itself. It collects money itself.
The frustrating thing about this discussion is we're missing a fundamental point here, and that is that like everything we do is a trade. It's a trade between each other or a trade with yourself. You either trade with your future self or you trade with someone else. When I'm speaking to you as an audience, I do it because I feel I gain something from doing so. And when listening to me, you do it because you feel that you gain something from listening to me. So we're engaged in trade right now. Everything is trade. And like a vehicle that drives itself to the mechanic and refuels itself, that's also, well, someone will have to write this code and come up with it and whatever. It's still, at the fundamental level, it's human action and a trade and a trade-off. So you can't get around that by calling it decentralized. There's no point to the decentralization.
No, but
the word has been
Bitcoin works the
misinterpreted.
same way, though. Bitcoin works the same way.
It does, but Bitcoin does it for the most saleable good in society. It's the only layer of society we have to have this in, because money, by the Austrian definition, is the most saleable good in society. So that is, we need the decentralization there in order for the supply not to be diluted and the coins to be double spent. That's the only point of the decentralization. We're approaching all of this from the wrong angle. Why decentralization? What's the perks there? What problem does it solve?
Well, we can talk about, I don't want to get too far, we can talk about decentralization, but I think a lot of the answers given by Alex and other people have been
All right,
really good.
one quick question, very
Last
quick.
question, Jay, go ahead, sir.
I have more of a statement. I have a technical solution for a decentralized YouTube to fight censorship. I've been thinking about this problem for 3 to 4 years now, and I'm looking for a group.
Okay.
It's Lightning and other obvious technologies, and I can use some feedback from photographers, and I'm happy to pitch anybody who wants to
So
Nice.
anybody
Yeah.
looking
to
at,
challenge the ideas.
Well,
Yeah.
if anyone in this room can shut it down, if it doesn't make sense, that'd be Jimmy's song sitting right behind you there. Who's coming up on stage in about 2 minutes?
all right, I think any final thoughts before we get to, okay, well, thank you very much. Giacomo, quickly, last question, go for it, sir.
So, you mentioned time travel, and you mentioned robots taking over, but nobody mentioned Arnold Schwarzenegger. So I feel that's missing for the panel.
Oh yeah, no, and I tweeted about it this morning. I don't know if you guys saw the news.
Yeah, I saw it. Yeah.
He was quoted as saying to the anti-maskers, "Screw your freedom."
The Arnold said,
Get to the chopper.
I just wanted to say,
Everything went downhill when you started being vegan.
yeah, that's true.
Yeah.
That's where I made his first mistake. I want to thank our panelists, Gabriel D Vine, Knut, Svanholm, and Vays. So thank you so much. And great questions from the audience. And thank you.